Welcome, everybody, to the weekly edition of the Not Your Average Show. Today, as we bask in this glorious after summit glow that everybody is feeling, everybody that showed up, we want to bring it back to basics. We want to bring it back to outcome-based investing, this unique approach to real estate investing, and the business model that needs necessary to support it, and the results that it can achieve. I'm your host, Pablo Gonzalez. With me today, standing in for GC, she has been recently promoted, right, Allie?
Yeah.
Allie King, why don't you tell us about the new title you got going on here?
Yes, gladly. So I am, thank you so
good.
much. I am the manager of the portfolio management team. So previously was a supervisor, newly a manager.
Let's go. That's awesome. And the world famous, the man, the high tightrope walker, circus master, the ringmaster, Drew Barnhill. Welcome to the show, Drew.
Very nice to be here today. Thank you guys for having me.
Drew, how are you glowing?
I'm glowing, man. Every year I get re-energized by the summit. I see lots of old friends that really kind of pick me up. And then Jay Earp, you mentioned a new friend of mine now.
Yeah.
I met Jay there, awesome guy from Connecticut. It's just this is truly a community, and that's one of the things I like about it. It is a great investment, but it's also truly a community, and everybody pulls for everybody else. And we're always bouncing ideas off each other. Hey, what do you think about this? What do you think about that kind of thing? So it's a great club to be a member of, I would say.
I agree. Anything stick out for you, Allie, from Summit? Anything you're thinking of? I'll go first so you can think about it.
Okay, go first.
This is the fourth year we do it, and I'm starting to notice a pattern, right? Like we always end with this like happy hour. And as we're in this happy hour, I've started to realize, like, I see folks coming up to Greg one-on-one during that happy hour, and it's always a very similar, like, body language that I see. And I can tell that he's having these conversations of, like, because they come up to me and they say the same thing. This, like, man, this is so much better than I expected. This is really special, right? Like, it's like these, like, people have this, like, open posture, and Greg has this, like, heartfelt accepting posture, and I've started to like get that pattern recognition in, and like now I get to watch it and I know what's happening,
From a distance.
And it really fills my bucket. It really fills my bucket, this idea that, you know, he and his partners got to build this company as a business owner. You don't get many opportunities for people to just acknowledge all the effort that you've put in and the benefit that you've created for the world. And I think it's really cool. Like that's the one thing that was new for me this time, like recognizing that.
I think for me, it's that it's very clear for me on the inside, knowing that we are wanting to have long-term partnerships. And truly it is that we are more than a property management company, more than a turnkey investment provider, but that we are true partners. And when you get to have these in-person interactions and you're building those relationships, it takes it to the next level. And I think it makes it that much more clear to all parties involved, like, we're in this together and we are in this together for life. And like, I am your go-to, you're mine. We have each other's backs, and it truly just feels that way to me every time.
Yeah. Drew, you said that you were exchanging gold nuggets. Did you take away any new gold nuggets that you heard for the first time that you didn't realize, or something that you shared with someone that you felt like was, you know, that blew their mind, since you're capable of both?
Gold nuggets. Well, it was great seeing John there, and he's my finance guy, and I'm talking with him about things now. That's one of the things I'm trying to do, is get myself in a position now where if things go right, I might reposition like 4 or 5 loans, you know, and
Okay.
between getting newer, you know, kind of and refinancing. So the interest rates have to cooperate, of course, but that's, you know, kind of something I was kind of looking through, and it was, you know, kind of working, and you know how I love that, you know, kind of working my way through that to see how I can get to do that. So I'm kind of prepared for that. I'm thinking about this summer, this fall, that we may have an opportunity for that.
That's cool. You are the ultimate financial engineer of this community, my friend. So it's cool. All right, so let's get into your story, Drew. But first, we got some breaking news. Allie, are you breaking news for the first time ever? Somebody else other than GC breaking news?
I think I'm breaking
Let's
news.
go. Break that news.
And it's exciting news to break, because it's everything, all things rental homes marketing and leasing when it comes to leads. I think the biggest pain point for a real estate investor is when their home is vacant. So I want to kind of drop some stats on where we're currently at. with all that goodies.
Okay,
So
tell us more.
crushing it in 2025 so far with rental home leads. We've been able to drive in over 13,000 leads so far in 2025 for rental homes. And that is up 138% from last year.
Ooh,
So a
okay.
lot of interest, a lot of focus on marketing and driving those leads. And that has led our leasing team to be able to successfully rent over 307 homes so far in 2025, which is a 60% increase from this time last year. So really, really big push there. Our JWB world record for homes rented in a single week is 53. 2 weeks ago, we rented 51. Last week, we rented 52. So naturally, we're breaking that record
World
this
record.
week and excited to share that with you guys next week when we break it.
Drew, what were you gonna say there?
Yeah, that's pretty awesome considering this is not the best time of year to be renting houses. It's an off season, so that's kind of pretty awesome to be doing that at this time.
Yeah, listen, as I look at these numbers, I think of what we talked about some in the summit, right? Like we talked about this idea of long-term thinking, owning the outcome, and outcome-based investing. And when I describe this idea of owning the outcome and what vertical integration really means, owning the property management experience, owning the money supply, owning the land supply. But within all of that is a very underestimated, you need to be really good at driving marketing leads to your homes in order to rent 6,000 homes. So this idea of like 13,000 plus leads so far, up 130%. It's just this like commitment to like continual improvement and excellence across every department of JWB in order to be able to own an outcome.
Yeah, and finding in your years where you're slower, or maybe your months where you're slower, where is it that you can really push the envelope? And we found that in the marketing with the leads, so that's what we focused on, and we were able to see the results. February rental income, we were able to pay 1,774 clients a total of, gosh, what even is that number? 5,408,309.69.
Let's go. Let's go.
Read that many
$5,408,309 distributed in the pockets of JWB
JWB
investors.
clients, yep.
Yeah. Very cool. Very cool. That's some good breaking news right there.
Insane.
I'm into it.
Let's break it.
All right. Let's get into, first of all, Drew. Drew's like responding to everybody that's commenting him here, but Drew, you only have it on panelists and hosts only. So nobody is seeing your effort as a man of the people that isn't just on the big screen, but also interacting in the chat. I don't want that to go unnoticed.
Yeah, it goes into everyone when I'm not a panelist, and when I am a panelist, I could change that.
Correct.
I will change that now.
There you go. Just know everybody that reached out to Drew in the chat has gotten a response. It's only us that got to see it though. So, all right.
Ignored everyone.
Drew, let's get into your story, man. Outcome-based investing. You've been doing this now even before you got to JWB, but tell us about who you were when you got to JWB and what you were trying to accomplish.
Well, I've been involved in rental properties before, probably for, I don't know, 20 years. And I had a lot of experience of A, managing properties myself, B, that property managers. I did all right managing property myself, but it was a damn job. It was just that would be too much of my time, and I didn't like it at all. Tried several property managers and really never really got the service that I felt I deserved. And part of that I really think is standalone property managers. Their incentives basically don't lie with their customers because they make money on turns, so if they do a turn every year, but that's not good for you, but that's good for them. Kickbacks on maintenance, and that's good for you, but not good for them. One of the things that when I first, was looking for was the whole property management side of it. And I love the idea that JWB had property management along with their turnkey. And I understood this because basically, Greg and I had a long conversation about this in the beginning, is that property management for JWB is different. It's not something that they have to make a ton of money on. It is something to incentivize us to buy more houses. And that made a lot of sense to me because of the fact that if he explained to me this one time, if you buy one house from us and you have a horrible property management experience, you're probably not going to buy a house again. And that's part of the big part of our turnkey business. So in the beginning, I remember me telling him he was not really interested in getting into property management, and then literally got into property management just because he had so many of those clients tell him the property manager picked me up, but it's just not doing me right. So that excited me because to me, I felt like I had a company that was aligned with my values and interests, because JWB's always gone out of their way to incentivize making property management and the bit and thing. And it has worked with me because I keep buying more houses. So it's kind of a symbiotic relationship. It's I'm doing good for them, but good for me, and that's there. And that's what that's what you look for in any business transaction. Besides everybody becoming good friends here and all like that. That
That's
was
just,
the added bonus.
yeah.
Yeah. Ellie, do you get that a lot, right? Like Drew kind of took me back. When we were eating that dinner with the walk around money dinner, Drew said something like, you mentioned something about like being the top of property management is not a very high bar, right? But like basically putting down other property managers. When you start interacting with new clients, do you get a sense that they're like set up to expect something different before JWB, and then now after JWB they have to kind of like understand that this is a different kind of thing? Or what's your exposure to like what the rest of the property management market looks like?
Yeah, I think it does come down to expectation setting, because depending on some just markets are completely different with what's expected in rental properties. Like for some markets, it is completely normal. If you are a renter, you bring your own refrigerator with you everywhere.
Yeah.
So there are just like normal things to navigate of what's different between each market. But the biggest piece is how passive or how involved you are as an investor. And that expectation is going to be different across different companies. Some can provide you property management services, but cannot provide you leasing services. Some are used to having their eyes over every single invoice that comes in, to where we run our game to be very passive, to say, you sit back, let us handle it, and then let's review everything, and being able to build that trust. It's going to vary depending on what your background is on how to build that trust and which is the best avenue to take for that.
Drew, what helped you come to that realization of this is a different type of property management?
Well, it made sense for me for numbers wise, and I always, I'm an accountant, so I always kind of go back to numbers and everything like that. And I understand, and one of the things I understood why private managers have such a hard time is because literally their incentives, are not aligned with the customer. And in JWB, I saw where property management was just one portion of the pie, so they could run their business model is different in that they are a turnkey operator and making money on the houses, and therefore the property management is an ancillary business designed to drive the first business. And that makes sense to me. Then I started watching, you and Greg on the show. I think that was in 2020, and everything like that. And I really got a good vibe from you guys. And that was, I said, let me give this a try, because the point I'm at in my life is I don't want to manage property myself. I don't want the mess and the fuss or anything like that. And JWB obviously makes things so easy for me. I've got a team that helps me out. Larry great with me, Allie and Kate and all of them that just been, anytime I need something, they're there for me. Sometimes I ask questions that they can answer, but they find answers for me. And I do really enjoy that. And they generally go out of their way to find answers for me and make my experience a successful one.
Yeah. So I think a big piece of your initial statement, at least, was when it comes to the alignment with avoiding vacancy. That's a huge thing for us, to where some other companies are going to be incentivized of, I want the shortest lease, because then you're going to have a turnover and then you're going to pay another tenant placement fee. Where for us, we are aligned that avoiding vacancy is going to be key at all cost, even if that means not getting a tenant placement fee paid every year. We do not want that. We want to avoid that, because we are just a returns driven business, and you are not going to hit those returns if you're going through a vacancy every single year on every single property. So we work to avoid that, and we have an alignment there.
Yeah, it makes perfect sense. It's kind of, what y'all are referencing essentially is that piece of different business model,
Yeah.
right? Like this like vertically integrated, fully aligned between departments, between clients and property management company, between residents and city and real estate developers,
Yeah.
right? Like that was kind of like what was on display throughout the summit weekend. Drew, I would love to talk about outcomes, right? Like we talk about this like outcome-based investing. What is it in particular that made you want to invest in rental properties? Like what was the outcome that you were trying to achieve from investing in rental properties that had you kind of persevering through the work that you had to do for yourself, the bad, third-party property management experiences, and still looking for another solution? When you finally came this way and decided this was it, kind of like what is the outcome? What was the why?
Well, for me, it was kind of setting me up for retirement. I mean, I did have 401ks and IRAs. I still have some of them, but I like the fact of especially a turnkey operation like JWB as far as setting up for retirement. Basically, I'm setting myself to a point where I have cash flow from these properties, and basically, you have IRAs, 401k, but you're taking money out of them, and you're diminishing them each month. I can take money out of my properties as the cash flow, and my assets don't get diminished. So I can't. To me, it's a long-term view of I can't run out of my money, finish my money out because the assets I never take a portion of the assets. And that's kind of very exciting to me. I mean, I like that fact. And people tell me, well, when you plan to sell this property? I don't ever plan to sell them. I mean, to me, that doesn't make a lot of sense. Besides which, if I need to take money out of them, I can always refinance. And as I tell people all the time, debt is tax-free cash flow. And
Spoken like a true financial engineer. What were you gonna say there?
I was going to say, we just spent a good amount of time this weekend when I watched people ask Drew some questions, and his answer a handful of the times always ended in, I like using other people's money. And that was just a solid ground to go off of. But you mentioned retirement being a key reason. And I think that's huge, and something that we try to at least drive all of our clients is to, if you can categorize your why for getting involved with real estate investments into a term. Is it leaving a legacy? Is it supplemental income? Is it retirement? Is it a kid's college fund? Whatever that is, being able to define that so that we can continue to go back to that when times are really great, maybe when times are a little not great, but being able to drive home to that reason and remember not letting emotion get in the way. Is it time to expand? We've got goals to hit. We're just a very goal-driven company, so being able to put that as an extension onto our clients is huge.
Yeah, and the why, right? Like the outcome that you're trying to achieve, this idea that a different style of retirement is an outcome, pretty common one, right?
Yeah.
Like and Michelle de la Pena says it, oh, that's a great point, Drew, when you're saying this idea that we've been conditioned to think that retirement is about save and grow, save and grow, save and grow, and then stop growing and then just start spending and start taking it out. The different outcome that retirement through rental properties is what you said, Drew. This idea that you hold on to the asset, you're able to take money out of the asset without losing the asset. You're able to pull money from the asset tax-free as opposed to taking a big tax hit whenever you need to like tap into the asset. And that sets up these opportunities for what I continue to call you, right? For financial engineering, this kind of like these options that you then have, right? Like we talked in the summit of this idea that you can use a rental property to, in 15 years, pay for your kid or your grandkids' college education, and then hold on to that rental property. And 15 years later, it can also pay for a major medical expense, and you still have it throughout all of it. And then we also tied it into this idea of, JWB has used these rental properties to build this business and do these things. And now they've like been able to drive a different outcome, which is affecting a downtown and building a city and all these different things. Drew, you wanna tell us? We're gonna go into your actual portfolio and how you purchased them, and we're gonna story tell, and we're gonna show your returns, which look magnificent. By the way, I'm sure Mr. I have a Excel sheet for everything.
Yeah.
It's helped that I haven't had a turn in 2 years, and that is so blessing. I did have one year where I had a turn twice in one house, and those things happen. You have to really understand those things happened. In the sports company, but if you well diversify yourself, you'll never have to come out of pocket for a turn. The more houses you own, the more the other houses kick in to pay for whatever it is if you've got a problem job. I know, probably you've been through a problem child before, so
I've had a problem
it does happen. Yeah.
Yeah.
And being able to separate that single property view to the full portfolio view is helpful with that. If you have more than one, to view it as what it is a performing portfolio versus an individual asset.
Tell us more about that, Allie, right? Like I think this is something that we've really championed a lot on the show.
Yeah.
It's you can look at the house as one thing, or you can look at like this cobbling together of a portfolio that by itself can drive an outcome. Talk to me about the difference between when people show up thinking, let me pick up a house versus how do I build a portfolio to solve a problem?
Yeah. And I think that should almost always be the vision. Even if you're only getting into one, it's what are my overall goals? How can I reverse engineer the math to get there? And then exactly like Drew hit the nail on the head, to be able to supplement each other, because some are going to ebb and flow. They might be doing that at the same time at some point in the cycle, but it's being able to hold on to them and to zoom out. It's really easy to get emotional about a single property. But if you take the emotion out and solely look at the numbers, I want to look at the portfolio as a whole, because when one is down, that can be when my other one is up. And if I'm only focusing on the down, I'm not focusing on what the reality of the numbers and the returns actually are. So it's kind of a fact checking your feelings with your portfolio manager here, where you're saying, all right, I'm feeling a type of way about this singular property. What's the reality of my actual money? Where am I at? Let me lean on you. Tell me how I'm doing. And then our team is able to paint that picture for you. And it might be the reality is that you're at a low with the portfolio, but what's the game plan? Are we long-term buy and holding? What was that? Why? How can we get in here? Portfolio as a whole over individual asset every day.
Was that always your approach, Drew?
Well, as I got older, it started to be more and more for sure.
Yeah.
And that's something that I kind of wanted to get into it. And quite honestly, JWB has been a better experience at this for me than at any other time in my real estate investing. It really has. I'm so thankful for finding JWB and what you guys have done for me.
That's awesome. That's awesome. Well, let's talk a little bit about kind of like the externalities, right? I'm about to pop up your portfolio. We're going to go over like the journey of buying homes and the returns there. Before that, I feel like there's been, outside of just this investment, you were just talking about it. You were like really researching Jacksonville. You eventually decided to move. You were going to move here because you were researching, and then you've moved to Florida, just down the street from us in Margaritaville. Talk to us, like, exclusive of the portfolio, just the mindset of doing this stuff and the community, and how you started in like Woodstock, Georgia, and now you're living in Margaritaville. Tell us a little bit about the effect of like the whole experience for you in your life.
Well, that was a time when yes, that I had decided I wanted to move back to Florida. I was actually born and raised in Florida, in Fort Lauderdale, South Florida, and then left after college and lived all over the country. And and kind of the last 10 or 15 years, I decided, well, I wanted to end up back in Florida again. So when I started buying JWB houses, I said, well, and Jacksonville seems like a pretty neat area, and I started studying it. And I made up my mind to move to Jacksonville and actually look at the properties there. And then I had a couple of old college buddies that were talking about moving back to Florida as well. And one of them, his wife's cousin, had bought this place in Margaritaville, Daytona Beach, and I didn't think much of it. So then we decided to go down there and visit this place, and I went down there with him, and we visited Margaritaville, and it was just an amazing community. It was, it's 55 plus community, basically for people that want to go out partying rather than sitting on a rocking chair on a porch.
Check.
It kind of spoke to me there and everything like that. So we all decided to come, and we all ended up buying houses in March. And it was a Daytona. It's about an hour and 15 minutes from downtown Jacksonville. It's also an hour from Port Canaveral, and I love to go on cruises and everything like that. So that was real convenient for me as well. So it was just a great area, and so I bit the bullet and bought a place, had a place built and bought that. And that was a 2-year process.
Yeah.
Because they had a waiting list that was a year long,
Yeah.
I'd imagine. Yeah.
So I went ahead and did that, and I'm loving it down here. It's awesome. It's literally like living in a resort.
You've got that life situation. You're also kind of like always on like a cruise or always on a vacation, right? I guess the picture I'm trying to paint is like you've really set yourself up to have options in life and like live the life that you're essentially having a good time most of the time. I hear from you, man.
Options are good.
Yeah.
Yes,
Yeah.
yes, yeah. At some point in your life, you want to be able to do what you want to do when you want to do it, and that's I think that's a goal for most of us, And I've been blessed in that respect that I have a lot of good people that I could travel with. I mean, I got a 3-month stay in India for my job. They paid for the whole thing, so that was nice, So life's an adventure, and live it up, folks. That's my motto.
Heard it here.
You heard it here.
Live it up.
Speaking of adventure, I think you're gonna like the cover page of your little portfolio show. So this is gonna be Drew's portfolio. Speaking of adventures, he's here swinging on a what is
Zip
it?
line.
A zip line. What is that?
That was
Costa
zip
Rica or something?
line. I believe that is in Belize.
In Belize.
How do you keep up?
Yeah.
How are you supposed to know?
Yes.
You're supposed to know. I love it, Drew. So just a quick disclaimer, right? This is Drew's numbers. We're going to go over some numbers. Everybody should do their own due diligence. This is, past performance, future results, all that good stuff, right? So like do your own due diligence. These numbers are not guaranteed. That being said, Drew, here's your purchasing journey, right? Like it looks like we were just talking about it, right? You were trying to remember if you had come and hung out with us before investing or not, but you bought this home May 26th. That was before you ever met anybody at JWB, probably before that famous meeting with Jen. And that, I guess that was like you coming in from the show, talking, like looking for it. You bought that home and then you bought a couple more in December. Can you kind of like talk me through that first purchase and then the next two?
Well, the first one, I've been listening to you guys on the show since like November, December 2020. And that's when I decided to make this now. So I said, I'm going to buy one and just see how it goes. And that's where I bought 53 Alpha Avenue, which I really loved. It was a great deal in Murray Hill neighborhood, which is a really up and coming neighborhood. It's near the Avon neighborhood. And so,
Avondale.
yeah, Avondale. There you go. And that kind of really nice right next to the river there. So it's a neighborhood that's really kind of starting to come up there. So I really have the appreciation for that. So I went with that initial one, and then it was like 2 months later that Jen and Renee and I had that first that first meetup there.
The original meetup, yeah. We call you the
Wow.
ringmaster because you were a circus major in college, but also because you were the first person to gather the community in IRL, right? That was Jen and Renee were in Atlanta. You reached out on the show. You guys got together, but yeah, continue down the story. Dean told me I had to explain your nickname, so I wanted to do it.
Okay. So then, at that point, I said, well, I said, I'm going to do it, and then I'm going to buy another house next year. Well, things accelerated a little bit because, basically the interest rates dropped to a point where I said, this is crazy. I mean, because whereas interest rates were at record low levels, people said, oh, it'll be like that forever. And I said, no, record low means they've never been there before. And so when you go to a place you've never been before, don't expect to stay there for very long. So I hurried up my thing and I bought 2 more houses in December. One of them is kind of interesting. I actually got the closing the deal and arranging that closing as I was driving down to a cruise. I was taking a cruise at Port Canaveral, and I was driving down there, and setting the whole thing up on the phone while I was driving down, setting up the closing and everything like that, because the closing they wanted moved up. So I said, well, I'm heading on a cruise. So I literally, they set it up for me to go by Maquila. So I literally, on my way down from Atlanta to Port Canaveral, I stopped in Maquila to close those deals were right then, right before I drove down to Canaveral and get on a cruise there. So that was kind of an interesting story too. So I got those two done. And then I said, well, let me, as many as I could afford while the interest rates were like this. And then, so then I actually bought two. So I bought five in a little over a year, maybe 13, 14 months. And those other two, now that one, the interest rates got a little bit away from me then, because this one, the rate just started to go up then. So I basically, when I first, not to down payment on these things, everyone, the rates are still low, but they went up quickly. So what happened was on this one, so I did that one, and that one came in at about 5.5%, 6%, which is good for us nowadays, kind of thing. But at that time, we were kind of, so then, and then they really went up more. So the one I did in June, I actually paid cash for, but it really wasn't cash. I used bounce transfer offers from credit cards to pay for that one. I actually did. Because at that point, I knew I could be covered from that, and I didn't have to worry about my credit. It dropped my credit. I did all those credit cards, it dropped my credit score, I think, from like 790 to like 650, because of the utilization rate. But I had worked everything out so that I knew that I wasn't going to need to really apply for any credit for a year. So, and I could recover from that. So that worked out fine.
Drew, let us caveat that one real quick, right? That is a super advanced technique. This is the reason why we call Drew the ultimate financial engineer. But yes, he bought a home based on zero interest credit cards that he pulled out. He keeps it meticulously daily on a spreadsheet where he knows every single piece of interest. He's like the ultimate money hacker. Not something that is for most folks, but one of the great reasons of coming to the summit, being there, because people are doing really, really interesting ways of buying properties, right? We always talk about this idea that capital is everybody's first thing, that like, I don't have the money, but you can always find the money.
Yeah.
It's all about like knowing what you're doing. So I just kind of wanted to put a little cold water on that one, because it's not,
Yeah.
but talk to Drew about it, right?
And I'll also say this: have a budget and do your forecasting. I was able to do this because I had a lot of monthly free cash flow. So, I knew it would be a temporary situation. And I budgeted everything out for the next year and a half, basically. So how I was going to be this. So that's the thing about it, is that you're right. Pablo, it's not for everybody. You got to do these type of things. You really got to budget, forecast, and stay on top of everything. To me, it's a hobby. I'm one of those people. I like playing with money. Like some people garden. To me, that's landscaping. Some people build furniture as a hobby. That's carpentry to me. Those are jobs. To me, playing with money is a hobby. I know it's a chore to some people, but as an accountant, I've always loved that. I guess maybe that's the reason.
Ellie, you had something to add?
Yeah, I was gonna say, I think that can be a cool technique maybe to pay for a turnover. Maybe you weren't expecting a turnover, there was an early termination in your lease and that came up, and maybe you weren't prepared for that. I think reserves are gonna be huge, but life happens, maybe something else happened that you weren't expecting. An interest-free credit card can be a solution for that. I think
With
big-
extreme
big
attention to detail.
advance to purchase a whole house with it, but nonetheless, he's our expert, other people's money.
Allie, I wanted to talk about a part in that story. Drew talked about this moment, right? Like rental properties had a moment in like mid 2021 to early 2022 where it was like the deal was the dead and people like rushed into it. I remember Drew and Jen got into this like contest to see who could like acquire the most properties. Talk to me about the change in dynamics of like that moment and why even today, even though we're not at those interest rates, why people are still buying.
Yeah, I think you guys know it here best, but the biggest piece of the puzzle, at least in the Jacksonville market, is that appreciation piece. So the earlier you can get in, that's going to give you the longest runway for your assets to perform. So even trying to time all of the unpredictable things, if we had a magic wand to know exactly what interest rates we're going to do, this community would be the first place to know that. But really, it's doesn't make sense to try to time it with that, or even to try to time what the prices are going to be for the homes, because we know it very well in this market. The prices are only going up, which are it can be good and bad, right? Good for you if you're an investor, because that means your home's going to be worth more money, but less good if you're saying, oh, I'm going to wait 5 years, or I'm going to wait to see what rates do, because if those go down, your home price is going up. So it does, if you're trying to time it for solely on interest rates, it doesn't make sense. And it's hard to try to compare it to those really low times, because exactly like Drew said, we had never been there before. We got there. We're probably not going back there. So trying to have this false hope that you're going to get your interest rate back down in the twos is going to lose you so much money along the way that you could have already made up in appreciation tenfold by the time you're waiting on that rate.
Yeah.
And can I add something to you? We have a
Of course.
basically, and we say basically, marry the house, date the rate.
Yep.
You know,
Explain that, Drew.
you can get the house, and it may not be the rate you want, but then you don't have to time the market, because if rates go down, you can refinance. And that's the thing. If you get the house at a good price and the house is appreciating, that's the number one thing. Rates go up and down. And one thing I'll say is I really was not timing the market when I bought basically the rates were already there. I knew they were there. So I was just doing everything I can to get as many houses as quickly as possible, because I knew that this was a time that there was probably not going to be repeated in my lifetime.
Yeah.
So is that, that did spur me to go as quickly as I could at that point. But I just bought a house in November this year, so I'll continue to buy houses, and that one was not at the rates that that we had been back then. But then again, the house, I got the house, but that was what I wanted. It cash flowed, and it's another piece of property. And if rates do come back again, well, I have not figured refinance that and even take money out of it.
Yeah, talk us through that one, right? We have the one that you said in you probably like closed somewhere around third, fourth quarter of 2024. What was the thinking there? Was it just like you had stacked up enough acorns? Was there like a moment in time? Did you refinance others to get this one? Kind of like talk us through that
Well,
that you popped in.
the conventional loan, that was actually a DSCR loan.
Oh, okay.
I don't know, maybe that you guys call it conventional, but that was actually a DSCR loan. And basically, you guys had a real special on. So there again, I was not going to. It was kind of like I was not going to buy until probably early part of this year. I was going to buy another house, and that was one that I was like, okay, you guys just ran this special. I said, I'm going to take advantage of this.
Drew, talk to me about a DSCR loan. What does that mean? Is that a cash flowing thing? Like, I'm super interested in doing that.
It's a debt service coverage rate. Basically what it means is that you don't have to qualify conventionally, and as part of the DTI in a property. The loan is on the property and not on you. So basically, and debt service coverage, what we're looking for is they will loan a certain amount of what the house will cash flow. And as far as that goes, it's about, if you could be in around the one range, then you could pretty much get that. But basically, they'll loan you the amount of money that that you can get out of cash flow. It's more almost like a commercial loan kind of thing. Is they're looking at what the place will cash flow and not what your finances are. And I actually couldn't qualify for that loan conventionally because I had done some other things and I knew my DTI wouldn't work at that point for that house. So the DSCR made a lot of sense to me in that respect.
Allie, have you dealt with a lot of these DSCR loans? Do you know kind of how that works? Like, is that I mean, I'm just like, well, why haven't I done this?
Yeah, I had not heard the term until earlier last year.
Yeah.
So that was something that we were looking to get creative with our lenders and said, what are our options for clients who maybe the numbers don't make sense because of interest rates, or what are just more options for clients who maybe they've maxed out on a certain amount of loans. Maybe they're looking for more flexible options within their LLC. So it was something that we really explored with our lender base.
Mhm.
Heard of it.
And-
I mean, I'm sure everyone else in my world had heard of it, but for me, it was my first
Yeah,
time
yeah, makes sense,
hearing of
yeah.
it. And then presenting it to clients and seeing it be a real option. But it was something we really started focusing on in 2024. And it might not always make sense, but he hit it right there where it's underwriting the asset versus the human. So depending on how you're qualifying and what your options are, it can really broaden your horizon and allow you to get a property, which like in Drew's situation, we had other incentives running at the time. So he could have waited to do it a different way, but it makes sense to be able to capitalize on our current incentives and see what options are out there. And that makes sense.
And I will say this, that DSCR loan didn't make as much sense 3 years ago when the mortgage rates were so low, because DSCR rates were like 2 full percentage points above your regular mortgage rate. Now the mortgage rate has gone up, and the DSCR rates have not gone up near as much. They're within 0.4, 0.5, they're within a half of a percentage of conventional loans now. So they become a really a much more attractive way to go in this market for sure.
Yeah, and Lee was just saying it, right? We got John Siebert was at the summit. He was talking about the DSCR product. Anybody that wants to, this is part of having a vertically integrated team that owns the outcome and owns kind of like all the different pieces. If you are curious about the DSCR loan, all you got to do is go to chatwithjwb.com, get on a call. Somebody like Allie will be able to talk you through what it means per property, per your portfolio, per your why, and the outcomes that you want to create. So if you go to chatwithjwb.com, that's the next first step. I'm actually writing a note to myself. I really want to have this conversation. Yeah, cool. All right, Drew, you ready to see how this thing has performed?
Sure.
All right, here we go. As we know, there's 5 profit centers in rental property investing. There is net rental income, of which since 2021, you've had 24,544. You've had tax savings of $5,800. You've had a principal pay down of $27,000. And then you've had the big one, the HPA, $181,000 for a total profit in just over 4 years, or maybe a little under 4 years from when you started, of 239,566, and a whopping rate of return of 23.22%. Drew, what do you think about that?
No, that's pretty good. It's actually been better than the tax savings as well.
I did my eyes at that because he told me that his tax savings
the tax
higher.
savings is very low, as a matter of fact. And part of it is because I have a job where I make a lot of money now. So the tax savings is going to depend upon, basically your W-2 income. And I happen to have a high W-2 income, so that it's been much more I've done. This tax savings has just been a big boon for me, in that respect.
So under promising, over delivering. What we have listed for his tax savings is lower. He is, again, the ringmaster and knows how to do everything on the back end to make the money go further. So he has even more profit than what we have outlined here.
I love it. I love it. And then, always here on the right, we like to show the distribution, the pie chart of the profit centers. This dark blue one here is home price appreciation. Everything else is the rest of it. It's why we call it the Pac-Man principle, right? Home price appreciation is somewhere between 60 to 75% of your total profits. So when you look at it on a pie, it looks like the Pac-Man. Everything else just looks like the mouth of a Pac-Man. This is why we preach investing in a growing market, right? Investing in a high appreciation market that cash flows, like at least neutral, so that you can participate in this home price appreciation. If you are maximizing for just cash flow, you're tripping over dollars to pick up the pennies.
Exactly.
And that's that. What do you think? What do you think, Allie? When you go, do you review pie charts with folks? Do you do, like, when you look at this thing, tell me more about like the review that folks get when they're talking to their portfolio manager. Like,
oh, yes, I would love to. So all turnkey clients are going to have this tool built out for them. It's available about a month or so after closing is when it gets updated. or uploaded, we update it on a quarterly basis for all of our clients. So that one was updated through the end of 2024. In the next couple of months, it'll be updated through Q1 of 2025 using our quarters, with Q1 being January, February, March. And we update it quarterly for clients so that they can have a real snapshot of how is my asset actually performing. I might have an inkling, or I might have a thought of how I think I'm doing all right, but being able to put numbers and figures like that in front of a client is huge. And it's just, it's mind blowing every time you get to display it. But we really strive for all clients to review this annually with their portfolio manager. You might think you already know everything that's on there, but then that's an opportunity for us to review your goals, what's happening over the next year for you, what else do you have going on in your investments that might be outside of JWB. What is this fancy DSCR product that's hit the market that might be really attractive for you, depending on what your goals are? So while it's easy to, all clients that we have have access to this tool all the time, but being able to get on that call and go in depth with your portfolio manager is crucial for your planning, because you're not only going over your assets, you're reviewing your goals. You're talking about when you want to acquire next so that you are on our radar. If Drew says, I think I want to buy around July of this year, I'm able to click that date on his profile so that when I have incentives coming up, I can reach out to Drew of maybe that incentive is live in June, and I can say, hey, Drew, I know you mentioned July. This is huge. This is flashy. You are who I thought of when I saw this, because we're having those conversations actively. So you're on my radar of who to reach out to. And then we're also pairing that with a full slideshow of the Jacksonville market. So you know where your investments are. I want to give you a snapshot into what is that market doing as a whole. Maybe it is time to pull the trigger on a few more that you were going to wait on. Get creative with your financing and your opportunities, because here's what's happening now, and being able to be the experts for you. I want you to be able to be hands off and sipping margaritas in Margaritaville and not having to keep pulse on Jacksonville neighborhoods and how they're performing and what's going on in them. I want you to be able to attend this call once a year and us to be able to give you the overview snapshot. Now, your client relations coordinator is going to call you more regularly to talk about the day-to-day of the property management of rent collected, lease-ins coming up, maintenance needed, renewals, etc. But this is almost a zoomed out version of like, this is our plan, what's happening within the next year and what's happened in the past year.
Good stuff. Good explanation. So
Yeah.
that to me is a key piece in owning the outcome, right?
Yeah,
Like a key
1000%.
piece in this like vertical integration piece that we talked about a lot during the summer. It's if you don't have somebody on the team that is kind of seeing what your outcome needs to be and keeping you on track, looking for opportunities, talking you through the hard times, and just keeping you informed, right? Like it's much easier to fail, whereas like that piece is handled by people like you.
Or just out of sight, out of mind.
Yeah,
If you're
out of
not
sight, out of mind.
reviewing it annually, you might have no idea what your numbers are doing or just the opportunities or where you're at with your goals. So we want to make sure we put it in front of your mind at least once a year.
Love it. I got a question here from Roger Evans. If you're in, maybe Allie, you can shed some light on this, or Drew, if you've ever been through this, but if you are negative cash flowing when you purchase a property by a conventional loan, how do you stay ahead of the payments, especially when everything like insurance and taxes and stuff tend to increase yearly?
Have you ever had that happen, Drew? If you've been behind on cash flow?
Well, I mean, there's the only way that you can really rectify that situation is a refinancing. I don't know of any other way. If you're negative cash flow and you don't, and you don't change the expense end of it, and the only way I can think of to do that, you might be able to shop around your insurance, see if you can get better on insurance taxes or taxes. That's what they are. And so you got two ways to go. You either gotta increase the rent, or you got to lower your mortgage payment, and that can be done with the debt. Or if it isn't negative, I don't know how much of a negative cash flow, but hopefully you can hold on until, because rents will rise. I mean, that's pretty much a given, especially in a market like Jacksonville. But you could also look into maybe refinancing that debt and see if you can get I'm not sure what your rate is on that, but you might be able to do that.
Yeah, I think it's a good, I'm glad you brought up the increasing rents because we're in a market right now, right, where maybe keeping your rent the same is going to make more sense than it going on the open market and sitting and having a vacancy, going through a property turn. So it's something that we can always balance the numbers out with of maybe you are going to be slightly cash flow negative and maybe you're going to be there for the next year or maybe even a little longer. But I think the long-term buy and hold paired with that portfolio mindset is really what's going to get you the gold, especially knowing that there are going to be options where let's keep this and know that your large scale outcome is going to be a success when we are watching rates and looking for refinance opportunities, when we are reshopping insurance. So
Mhm.
looking at it on a macro scale of what we can do might not always be an immediate solution to it. And if raising rents out the roof could just actually push someone out. So
Yeah.
really being able to balance the numbers there.
No,
Yeah, and I've heard that you guys also help kind of like you'll look at like the private lending side of it. So like if you can
Absolutely.
increase your passive income through private lending in order to cover that kind of like that rent profile and that provides like that gap piece to keep you like even. That's another way of doing it as well, right?
Huge. Yep.
Many different ways to skin the cat based on your situation, right?
Yep.
Hall of Famer Jim Kirko has a question for you, Drew. Drew explained at the beginning that he likes the cash flow without causing the asset to depreciate. However, with 24K of rental income over 3 years, it really cannot finance a retirement. Do you look at that cash flow as future benefit or is $800 a month what you were planning for?
well, it's actually more than $800 a month, so I'm not sure. Right now, my cash flow. Well, but you see, because of maintenance costs in there. So, but basically, the cash flow is about 2,000 a month. But then there are maintenance issues you have to take into account there. So, I don't. The cash flow basically right now, the cash flow is not something I necessarily need because I have a W-2 job, and and the tax rate is quite honestly is a bigger bucket for me right now. So I don't worry too much about that now. Further on down the line, when I'm not working anymore, then I'll structure the cash flow. It's a lot of it where you're at in life and what you need. JWB will tell you all the time, they can structure a cash flow portfolio. They can they can structure a growth portfolio, just depending upon your needs. And you might reach out to them for that because like I said, right now, my cash flow is fine, but it's not something that I rely on, so to speak. Like I said, right now, so it'll be something down the line that I'll further on. Right now, I'm in an acquisition phase, so that's my priority. So if I can get another house and I'm just cash flow even, that's fine with me, because like I said, I'm just acquiring assets now. But as I shift my strategy, when I don't have that high paying job anymore, I'll shift my strategy down to get more cash flow. And that's and you can adjust these things all the time.
Love it. Strategy specific, that is adjustable based to where you're at in your life and being able to build a portfolio around where you're at specifically and where we're trying to get.
Makes me think of what we say often. It's not about cash flow today, it's about cash flow when you need it.
Yep.
Right. So,
Right.
Drew, you are stacking up chips, you're building up net worth, and then you're going to leverage that net worth as the financial engineer you are to secure the cash flow you need when you actually need it.
Exactly. Right now, I'd rather have 10 properties with a total $1,000 cash flow than 5 properties with $2,000 cash flow. Because it's the asset right now. The asset is something that I can leverage and maneuver as we go along. So that's why I'm trying to accumulate as many assets as I can. Yeah.
Love it. That's a great takeaway right there. The Maven, Leslie Wilson, says that she sees that you bought one property with cash and not financing. Why, Leslie? You might have missed it, but Drew actually bought that. Drew actually bought that on credit card debt.
Yes, because it was the cheapest form of finance at the time. They were all 0%. It was 0% credit card debt, and I've been using that for 15 years. Because literally it is the cheapest form of financing you get. And then I stumbled across another thing is that you get a little esoteric. I had a couple of LLCs because I had businesses and everything like that. And credit card debt on LLCs does not report to your personal credit bureau. So you can actually be those without having a hit to your credit utilization, your credit score personally. So that's, but I'm always looking, I love the word arbitrage. Yeah, that's one of my favorite words. And I'm always looking for ways to maneuver money to my advantage, you know.
Love it.
Love it.
This was awesome, Drew. We're still basking in the after summit glow. All of us having a great time, man. It was really good seeing you this weekend, man. Like as always, this just really
And
really grateful that you were like the first guy to like raise the hand and bring people together. What were you gonna say?
real quick, can I give a shout out to John Seaver? He's awesome. If you haven't talked to him, he's great. Not only will he get you in the right, but he'll talk you through it, explain to you so you understand why the loan that you need is there. And he's a great partner for JWB. He really is awesome. I love working with him.
Yeah. He's incredible. Wonderful resource and an extension of the company because he knows also our goals and where we're wanting to get clients to. So being able to add that to the vertical integration is an extreme asset.
Yeah, John Siebert, Patriot Home Loans,
Patriot Homes
JWB,
Lending, yeah.
Patriot Homes Lending, JWB partner who sponsored the summit, right?
Yeah.
So he was there, hanging out with all of us. This was awesome, folks. Allie, great job. First of all, for those that don't know, Allie had 0.0 voice on Saturday
I'm
night.
so
He's
bad.
really good. Yeah.
I couldn't sing karaoke and I just had to raise the roof in the background, but we're back.
She sent an email as late as yesterday evening saying, hey guys, just in case my voice doesn't miraculously return overnight, I hope you have a backup plan. The backup plan was just me and Drew hanging out, but I'm really glad that you did it. You came
Tea,
back.
honey, lemon, success,
Success.
little bourbon.
Mindset. Right.
Awesome. Yeah, I'm glad it happened that way because I love Pablo, but it's nice having you on the set as well, Al.
Well, thank you. And thanks for joining us today, Drew.
Yeah, I don't disagree in the least. It is great to have Allie. It is great to have the community show up. We just spent the whole weekend together. And even still, you show up in force today, 90 plus folks. I'd never take for granted the idea that you take an hour of the middle of your workday to come here, get educated, connect with folks, ask great questions. You are the reason why this community exists. And Drew, you as the ringmaster, you are one of the big reasons this community exists, my friend. I appreciate you so much, man. I'm so happy I got to see you. So happy to see your returns are doing well, man. Thank you for doing this. And any advice you have for folks as we sign off here, bud?
Don't be average.
Don't be
Don't be
average.
average.
See y'all.